Hi students, Namaskaram. Now we are discussing our 7th practical problem in the chapter Income from House Property. Mr. Rahul is the owner of a house whose municipal valuation is rupees 36,000 per annum. 1/3 portion of the house is let out to a tenant at rupees 1,600 per month for residential purposes, and remaining 2/3 portion is occupied by him for his own residence. The construction of this house started in June 2015 and was completed on 1st November 2017. The house is subject to local taxes of Rs 3,600 per annum, which are unpaid. The other expenses in respect of this house are as follows: property tax to the state government Rs 720 and fire insurance premium Rs 600. He had taken a loan of Rs 50,000 on 1st July 2015 for the construction of the house. The loan has not yet been paid back and an interest at 12% per annum is payable on it. Find out income from house property for the assessment year 2021-22. This is the question and now we are entering into its solution. The speciality of this problem is that 1/3 portion of the house is let out to a tenant at Rs 1,600 per month, and remaining 2/3 portion is occupied by him for his own residence, means self-occupied. 1/3 portion let out during the previous year at Rs 1,600 per month, balance 2/3 portion self-occupied for the previous year. Therefore, we have to consider these two parts of the house as separate units. Therefore, we have to compute income from house property of 1/3 portion let out and 2/3 portion self-occupied separately. And in this problem, for the entire house, there is interest on loan. In the screen, as last sentence, we can read, the construction of this house started in June 2015 and completed on 1st November 2017. The date of completion was on 1st November 2017, not the date. Date of completion 1st November 2017. Okay. He had taken a loan of Rs 50,000 on 1st July 2015. It is the date of taking loan, 1st July 2015. We are given date of construction completed, 1st November 2017. And date of taking loan, 1st July 2015. Then we can say there is interest on loan prior to the construction completed. It means there is interest prior to construction. The amount of loan is Rs 50,000 and rate of interest 12% per annum. Note the date. Date of taking loan 1st July 2015. Date of construction completed 1st November 2017. And we know the interest on loan from the date of taking loan up to the 31st March, just preceding to the date of completion, is the interest prior to construction. Loan എടുത്ത ഡേറ്റ് തുടങ്ങി കൺസ്ട്രക്ഷൻ കംപ്ലീറ്റ് ചെയ്ത ഡേറ്റിന് തൊട്ടു മുൻപത്തെ 31st മാർച്ച് വരെയുള്ള പലിശയാണ് interest prior to construction അഥവാ പ്രീ കൺസ്ട്രക്ഷൻ ഇൻട്രസ്റ്റ്. Therefore, find the 31st March just preceding the date of construction completed. It is 31st March 2017. 1/11/2017 കൺസ്ട്രക്ഷൻ കംപ്ലീറ്റ് ചെയ്തിരിക്കുന്നു. അതിന് തൊട്ട് മുൻപത്തെ 31st March 2017. Interest prior to construction is the interest which is calculated from the date of taking loan up to the 31st March just preceding the date of completion. Therefore, here interest prior to construction, pre-construction interest, starts from 1st July 2015 to 31st March 2017. ഇവിടെ ഇൻട്രസ്റ്റ് പ്രയർ ടു കൺസ്ട്രക്ഷൻ എന്ന് പറയുന്നത് 1/7/2015 മുതൽ 31/3/2017 വരെ, അതായത് ലോൺ എടുത്ത ഡേറ്റ് മുതൽ കൺസ്ട്രക്ഷൻ കംപ്ലീറ്റ് ചെയ്ത ഡേറ്റിന് തൊട്ടു മുമ്പത്തെ 31st മാർച്ച് വരെ. ഈ പീരീഡില് എത്ര മാസങ്ങളുണ്ട്? 1/7/2015 മുതൽ 31/3/2017 വരെ എത്ര മാസങ്ങളുണ്ട്? സി 2015 ജൂലൈ, ഓഗസ്റ്റ്, സെപ്റ്റംബർ, ഒക്ടോബർ, നവംബർ, ഡിസംബർ, 6 months. ദെൻ 2016 ഫുൾ ഇയർ ഉണ്ട്, 12 മാസം. 2017 31st മാർച്ച് വരെയാണ്. ജാനുവരി, ഫെബ്രുവരി, മാർച്ച്, 3 months. 1/7/2015 മുതൽ 31st മാർച്ച് 2017 വരെ 2015 6 മാസം, 2016 12 മാസം, 2017 3 മാസം. ഇൻ ടോട്ടൽ 21 months. That is, interest prior to construction is the interest for 21 months. അതായത് 1/7/2015 മുതൽ 31/3/2017 വരെയുള്ള 21 മാസത്തെ പലിശയാണ് interest prior to construction. And we know the interest on loan is divided into 2 parts. Interest for the previous year and interest prior to construction. We know the amount of loan rupees 50,000, rate of interest 12%. Interest for the previous year, amount of loan 50,000 into rate of interest 12%, 6,000. Then interest prior to construction, amount of loan into rate of interest 12% for 21 months, that is into 21/12, 21 മാസത്തേക്ക് 21/12 into 1/5, because interest prior to construction is allowed as deduction in 5 equal annual installments. Therefore, into 1/5. Interest prior to construction, amount of loan rupees 50,000 into rate of interest 12% for 21 months, 21/12 into 1/5. We get rupees 2,100. Total interest for the house 8,100. ഈ മൊത്തം വീടിന്റെ പലിശ 8,100. Now we are computing income from house property of 1/3 portion which is let out for 12 months. 1/3 portion which is let out for 12 months. For computing income from house property, first of all, we have to compute gross annual value by comparing expected rental value and actual rental. For computing expected rental value, we are given municipal valuation rupees 36,000. The municipal valuation for entire house 36,000 per annum. Therefore, municipal valuation for 1/3 portion, we are computing the income from house property of 1/3 portion which is let out. Therefore, municipal valuation of 1/3 portion 36,000 into 1/3, rupees 12,000. B clause actual rent. 1/3 portion of the house is let out to a tenant at rupees 1,600 per month. We are given actual rent 1,600 per month. That is 1,600 into 12, 19,200. Actual rent 19,200. Compare the expected rental value and actual rent. The highest amount will be gross annual value, that is 19,200. From gross annual value, deduct municipal tax paid. In this problem, we are given the house is subject to local taxes of rupees 3,600 per annum, which are unpaid. Here, municipal tax is unpaid. If the municipal tax is unpaid, there is no deduction in respect of municipal tax, because the municipal tax is allowed as deduction only on payment basis. Here, municipal tax is unpaid, therefore municipal tax paid nil. Then unrealized rent. In this problem, there is no unrealized rent. Now we get 19,200. It is the net channel value. Less deductions under section 24. First, standard deduction. 30% of the net channel value for repairs and collection charges. That is net channel value 19,200 into 30%. 5,720. Then interest on loan. We had computed the total interest on loan of the house 8,100. Therefore, interest on loan for the lettered portion 8,100 into 1 by 3. 2,700. Deduct these two items, we get 10,740. It is the income from house property of 1/3 portion let out. 10,740. Then we are computing income from house property of 2/3 portion, which is self-occupied. If a house property is self-occupied, its net channel value taken as nil. From net channel value, there is only one deduction in respect of interest on loan up to rupees 30,000 or rupees 2 lakh as the case may be. Here the interest on loan 8,100 into 2 by 3 because 2/3 portion is self-occupied. 8,100 into 2 by 3, 5,400. Now we get negative 5,400. It is loss from house property, self-occupied. The net channel value of self-occupied house shall be taken as nil. From this, we are allowing deduction in respect of interest on loan. Total interest 8,100. Therefore, interest on loan for 2/3 portion 8,100 into 2 by 3, 5,400. Now we get loss from house property 5,400. This is the income from house property of 1/3 portion, which is let out 10,740. Then loss from the self-occupied house 5,400. Add them. Computation of income from house property for 1/3 portion 10,740. For 2/3 portion loss 5,400. Add them. We get 5,340. It is the income from house property of entire portion. മൊത്തം വീടിന്റെ ഇൻകം ഫ്രം ഹൗസ് പ്രോപ്പർട്ടിയാണ് 5,340. Then in this problem we are given property tax to the state government and fire insurance premium. We know these are not deductible while computing income from house property. Question തന്നിരിക്കുന്ന property tax to state government, fire insurance premium നമുക്ക് ഡിഡക്ഷൻ കിട്ടുന്നതല്ല. So thank you.